Welcome. My name is Steve Babalan, and I'm here with Wealth Management Canada. Today, we are extremely lucky to have Triasima Portfolio Management. We have Scott Collins, the Deputy CIO and founding partner of Triasima, and we have Mathieu, the President and Senior Partner of Triasima. Thank you both for joining us today.
Thank you, Steve.
Great to be here.
Scott, being one of the founding partners, can you walk us through a little bit about the Triasima history?
Absolutely, be happy to. So we need to go all the way back to the 80s to bring us to the beginning. And that really starts with Andre Chabot, who is our CIO and CEO and one of the key drivers at Triasima. Andre is an engineer by trade. No question, he has a very curious and creative side. He began his career when computing power and data banks of information became available. And this is where he started to put together the three-pillar approach for investing, which includes various analytical methods and was really quite forward-thinking at the time. Previous to Triasima, both Andre and myself worked at larger organizations in corporate finance, but we weren't satisfied with the work environment and flexibility these groups afforded us, which brought us both together at a small emerging portfolio management firm in the late 90s. And this is where we met the third founding partner, Redwine Carradine, who has a strong interest to quantitative and technical techniques to investing. So we were lucky enough to have met each other at this small portfolio management group, and we quickly decided we needed to start our own firm. So the firm really had modest beginnings. It was born out of the idea that in order to apply our unique way of investing, we really needed the right work culture. It was also important that we knew our only real boss would be our clients that we needed to satisfy over time. And this meant being independent. So with very few resources, we started the firm to achieve this goal of independence. We did this, and through our investment methodology and our personalized servicing, we generated strong investment returns and high client satisfaction, which allowed us to grow the firm to where it is today. And I have no doubt will continue to drive us forward in the future.
So here we are today, 20 years later, and the firm now has 30 employees, is still independent. As a matter of fact, out of the 30 employees, 9 of them are shareholders of the firm. So we're not linked to any other financial institutions, for example. We're based out of Montreal, and we now manage $4 billion for a wide range of clients. So we have quite a few individual clients, but also banks, pension plans, endowments, and foundation. And over the years, we've developed various strategies to meet the needs of those wide range of clients.
Thank you both for your answer. Why do you think the firm has worked so well?
Yeah, I think it really has to do with our work culture. It's ultra important to us. We have 6 core values which help guide and foster our environment. They're all important, but there's one that really stands out, and that's humility. And it's immersed in virtually every aspect of the firm. And some of the positive byproducts of a humble culture is that we're able to generate a fun work environment, and this attracts and retains our talent. So our people who are so key to the business. Another important one is the emergence of a dynamic team that pushes innovation forward naturally but quickly. And that's because we're always seeking enhancements and we're never resting on our laurels. So, I believe that culture is really one of the keys to our success.
Thank you so much for explaining the culture, Scott. Really appreciate it. Now, Mathieu, Triasima is known for its unique 3-pillar approach. Can you please go into a little more detail about it?
Yes, absolutely. In fact, the 3-pillar approach is at the roots of our success. Scott mentioned innovation. Triasima started with an innovative approach called the 3-pillar approach. At a high level, what it does is it helps measure the attractiveness of securities out there so that we can identify those names that should be added to a well-diversified portfolio. Now, it's called the 3 pillars because any name, any stock or security that makes it to the portfolio will be looked at from 3 different angles. And we call them pillars. They're in fact investment methodology. The first one's the fundamental pillar. The fundamental pillar is really financial analysis as most people know it. We meet hundreds of companies every year. We get a good, clear understanding of the quality of those companies. We look at their products and services. We look at their management teams. We look at their operations. And the idea is to have a clear opinion on the quality of the firm. This pillar is much more qualitative. The other 2 pillars are quantitative. in the sense that the quantitative pillar, the second one, focuses on financial ratios. Here, what we're doing is we're really looking or comparing a company's financial ratios to other companies in the investable universe. And we're trying to find those companies that have the strongest ratios. So for example, good earnings growth, good revenue growth. We prefer that to lower revenue growth. We prefer companies that have low debt versus high debt. A low price earning ratio, which measures the expensiveness or cheapness of a stock. All this to say, companies that have strong financial ratios will be more attractive to us than those that have weaker ratios. The third pillar is quite unique to Triasima. It's the trend pillar. It could have been called the momentum pillar. Here, we don't look at financial ratios. We look at the stock price. And we believe in the phrase, trend is your friend. We like buying names that are already trending up. We don't like to catch a falling knife. For us, a stock that is going down is a big red flag. In fact, if we own it, we'll think about reducing it or selling it. On the other hand, what we like to see is a company with good operations, good financial ratios, whose stock price is already going up, which means something good's happening with that business. And we don't mind missing out on the first 10, 20% if there's 100 or 200% left in return in that name.
Interesting. Thanks, Mathieu. And would you guys be able to provide an example of a company?
Yes, this is a fun way to get a sense of how the methodology actually works in practice. We have an example to run you through. It's a buy of a company called Freshpet. Freshpet is certainly a unique name. It's a pet food manufacturer, but the catch here is that its niche is fresh pet food. So it's a premium product that needs to be refrigerated, unlike a dry pet food or a frozen product. In our example, we have a chart. This is the chart of the stock price for Freshpet over the last year, and the blue arrow indicates when the name was purchased. We also have our three-pillar analysis broken out. And I'm going to run you through that analysis starting with the fundamental pillar. So the company's situation. And it was very positive at the time of purchase. And that's why you see the green dot with a +2 under the fundamental pillar or the purple triangle. When we look at the company from a bigger picture, one of the key considerations is the increased humanization of pets. And what I mean by this is that individuals and people are looking to treat their pets like family members, friends, essentially more like humans. And with humanization, there is a trend to increase the quality of goods and services around our pets, such as grooming, toys, and food is an important item owners can upgrade to this effect. So Freshpet is smack in the middle of this evolving trend with its premium fresh pet food. If we have a look at the company specifically, besides the fact it has a strong brand in fresh pet food, Freshpet is a leader in fresh pet food infrastructure. And that's important because fresh pet food needs to be refrigerated. And this company has an immense install base with approximately 21,000 fridges in place, which is a key competitive advantage for them. So these are some of the reasons why we like Freshpet from a fundamental perspective and why it ranks so well. If we look at the quantitative pillar, so this is the financial ratios of the company, it wasn't particularly strong at the time of purchase, and that's because this is a newer company. And that's why you see the red dot under that green triangle. Although the revenue growth is still very high at 25%, and that's likely to stay in place for some period of time, the firm still isn't that profitable yet, and that's because they're investing heavily for future growth. When we look at the trend pillar, so this is the stock price itself over time, it was positive. So the stock was moving up strongly at the time of purchase, and why you see the green dot under the blue triangle. So when you add those scores together, the overall score was quite good, and the names slotted in nicely to a number of our mandates. So this is an example of a name that can be owned by our private clients that's part of a well-diversified portfolio and aligned with our clients' objectives and risk tolerances. Certainly one of the big positives that needs to be highlighted regarding our methodology is that purchase ideas can come from any of these three pillars, and they help us to identify unique opportunities like Freshpet. Other notable examples where we've captured outsized value include Shopify. So Shopify is a well-known name here in Canada. It provides e-commerce solutions. We've owned it for years for our private clients, and it was first identified by our fundamental and trend pillar. The quant actually was not very strong when we bought Shopify, a little bit like Freshpet. Another name that we own is called Real Matters. It's not that well known. It's growing at a very quick pace. It provides a digital network of real estate appraisers for banks, primarily in the US. And we identified this name using our quant and fundamental pillar. So you can really see the power of our process through our name discovery, but you also have to understand that we build well-diversified portfolios. We're not just buying high growth, more concept-oriented names. So we buy mature names for stability, and such names would include groups like Royal Bank here in Canada, Microsoft in the US, and a well-known name that's international is Swiss Life Holdings.
Excellent. Thank you very much, Scott, for providing those examples. Now, how does Triasima integrate environmental, social, and governance factors, ESG factors?
Yes, so ESG is really responsible investing. The idea here is that companies with strong ESG practices are moving in a positive direction for society and should be more sustainable in the long term, as opposed to financial decisions just to optimize profits in the short term. It's important to note that at Triasima, we've always incorporated ESG or responsible investing in our process. It's just that it wasn't called ESG 20 years ago. So we have ESG criteria incorporated into our 3-pillar analysis, and we measure and track it along a number of axes, including such things as carbon footprint tracking and certain mandates.
And ESG has gained a lot of traction over the years. We've even developed new products to meet a growing demand for ESG friendly investment. And among those products we've developed, we've offered our clients a Canadian equity ex-fossil fund and a all country world equity ex-fossil fund. So clients of Triasima can now decide to invest either the traditional way or in a way that reduces their carbon footprint and avoids stocks or companies from the energy sector that use coal for electricity generation.
Cool. Thank you very much, Mathieu. You've talked about quite a few strategies today that Triasima employs. How do you decide what's most appropriate when dealing with new clients?
That's a good question. When we have a new client, the idea is really to get to know the client. And through various meetings, whether it's in person or over the phone or during the pandemic over Zoom or Skype, the idea is to get to understand the client's objectives and the client's risk tolerance. And based on that information, we will propose a customized investment strategy. For example, clients that are more risk adverse, there might be more bonds and more preferred shares versus standard equity. We have clients that are much more aggressive. They want some growth, so maybe a bigger focus on equity. We can also be ex-fossil if the client wants to stay away from energy companies. We could also even have alternative products, hedge funds, for clients that want something maybe a bit more sophisticated. But this is achieved really through an exchange with the client, collaboration with the client, and ultimately, once approved, we'll implement, and after that, we'll report to the client on a regular basis so that this person can know exactly what's going on in the portfolio, holdings, performance, purchases and sales, and we'll keep the communication channel open. Ultimately, we want to be top quartile, not only for performance, but for servicing as well. That's what's made our success over the years. We want to continue doing that.
Excellent. Thank you so much for that answer, Mathieu. Well, those are all the questions I have today. Mathieu, Scott, thank you so much for taking the time to talk about Triasima's history, 3-pillar approach, how Triasima integrates ESG into its portfolios, as well as how you determine what strategies are appropriate to new clients. So thank you again.
Thank you, Steve.
Thank you very much.
For more information, please check out triasima.com, or to get in touch with the client services team, email clients@triasima.com. Thank you.